boy. Now use Euro USD for this CRT because gold never print CRT this evening. Uh-huh. Yeah. See, I wan use daily time frame for this CRT so that e go dey easier to understand. E go dey sharper. See this box wey dey here na fair value gap be this. Na point of interest. Try well. Na point of interest be that so. For CRT for okay may I use English. In CRT is all about one candle body closing back inside the previous candle body. Right? For example now, this one now, this is our candle range low. This is the lowest wick of the previous candle. Yesterday daily candle. This is the lowest wick. The lowest price, the lowest point price reached yesterday. See the candle high. Either candle high or candle open, anyone. But for CRT, we dey prefer to call am candle low and candle high because na the target range be that. This is the candle low. So may I write am CRT low. CRT sweep. That one na candle range sweep. So na the candle range high be this. So for this our CRT to dey valid now, we would want to see this bullish candle, this daily candle, this my white candle close inside this range, close above this candle range low. A close above this candle range low is a valid CRT sweep, and markets dey react to my point of interest. See am, daily support. My point of interest markets dey react to like this now. So na the perfect entry zone be this. Na the perfect POI to take enter CRT, and na the same thing XAU dey do to my point of interest, but make we leave XAU first. This one gets clear CRT for here. XAU CRT never form, so make we use this one. So drop to a lower time frame for confirmation. I use my 2 hour for confirmation. Wow. So see am. So now below our candle range sweep and our candle range low, we have another block here. Another block inside our point of interest, just below our candle range low in a daily time frame, which is a very high confluence of hitting the bag of making money. See our candle range high, sitting inside a 2-hour fair value gap. But this fair value gap na inducement be this to trap retail buyers to thinking say because market broke below this minus support, this inducement level, this idea wey dey this small 2-hour order block now, dem go come mark am as failed order block, come place a lot of entries there, stop loss. Na classic SMC engineered liquidity be that. Na the na smart money engineering liquidity they call that one, SMC liquidity engineering. Na be that one. See the major point of interest. Well, this point of interest align with the daily point of interest, and this point of interest still align with the weekly point of interest too. But I no wan go to that weekly chart. I need the swing trade now like this. My swing trade na later something. So see this other block, our point of interest now. Other block has turned our primary point of interest. This one now, I be where we dey after. This other block is now the point of interest. So now we want to see what the market has for us in this other block right here. The standard CR routine now. If I want to sell now, once I've confirmed my change of character now, I place my entry here or here, anywhere I choose to place my entry. Then I'll come put my stop loss here. It will give us poor risk to reward ratio. See, I'm 1 to 1. Maybe that sniper entry when I dey use it all the time, and you know easy to get that sniper entry. I just precision. Now it matters most, and patience. See the 1 hour time frame. Now inside the 1 hour time frame, now we have a fair value gap in the 1 hour time frame. See our candle range low, candle range high. See the same thing I tell you now. See the same thing. So see the point of interest here. This one is often an inducement, and if you check XAU very well, and same thing they play out for XAU, same thing that played out in XAU. Check very well. Check very well. They have all USD at the bottom. They all have USD at their bottom, at their extreme end, something like that. See the 30-minute time frame. You see another block here, another one again. Well, that's not our issue. Now 15 minutes now, na be the main POI. So now see our 15-minute time frame. We have 2 point of interest. We have a rejection here and the fair value gap. We have an order block and a breakaway gap. Now this is considered a fair value gap because a fair value gap is a gap created by the market to balance the inefficiency of orders left behind the market due to market speed or due to displacement. Everybody know fair value gap. We all know a fair value gap. But now there's a difference between a fair value gap and the breakout and the breakaway gap. The fair value gap is this candle wick closing right inside the body of the second candle, the third candle rather. This wick is what makes this a fair value gap. Why this one now that has no wicks is a breakaway gap. This is the market leaving space due to the displacement of smart money, due to the distribution of smart money. Now be this breakaway gap we would see here. So this small gap is a breakaway gap. It's not considered a fair value gap. See the fair value gap. So now we mark this one. We mark this other block as an inducement. That's the liquidity the market need to fuel this Euro USD. This is the liquidity the market need to fuel Euro USD. So we label it LQ. Abbreviate it as liquidity. Okay. So now since we've gotten our liquidity now, we shrink our box. We shrink our point of interest. Our point of interest down to this other block here. From here. This one now, this is now our point of interest. This is now a valid point of interest. Anything above this point is not valid again. All these ones are just void. Void the market has to fill for price to tap into our point of interest now. Now, if you check the 5-minute time frame, you still see the same thing happening. You see the liquidity pool here. For you to get a sniper entry to avoid excessive stop loss, to avoid large stop loss, you have to compare all time frame from the macro time frame to the micro time frame. So the macro time frame is from the daily down to the 1 hour. The micro is from the 45 minutes to the 1 minute time frame. And see the same fair value gap here. Okay, this is not a fair value gap. This is just a gap that is corresponding with the 15-minute fair value gap. This one is just a gap. It's not a fair value gap. It's just a corresponding gap, a breakaway gap due to market efficiency. So now see where the major sniper entry lies. If you watch closely, if you watch this 3 minute time frame well now, you see a valid point of interest. We have our liquidity here. This is our liquidity here, and we have our point of interest here, sitting here. This box, this small box. Now, AMD traders now, they'll picture this thing as accumulation. This small box here is accumulation. This is manipulation. Now, if you watch Euro USA very well now, we are in an uptrend. This is an uptrend. In standard SMC trading, in standard SMC, this is manipulation. This is inducement to induce early buyers and breakout buyers to thinking the trend is going up. Trend is not going up. This one is just clearly an inducement. Let me make it thicker. See the market. Now you see trend buyers now, trend and breakout traders now, right? You see this point of interest and